chapter 17, which is entitled Production, Income, and Unemployment, cover a wide range in our economic spectrum. The first concept that I'd like to have you concentrate on is the term gross domestic product. Gross domestic product is often illustrated with GDP, and the definition is very important for you to understand and have a firm understanding of this definition. The gross domestic product is defined as the total value of all final goods and services produced for the marketplace during a given year within the nation's borders. In breaking down that definition, when we use the term total value, since we don't want to count the total number of oranges and the total number of apples or the total number of loaves of bread or the total number of haircuts produced in a year, we count the value and we use a dollar value in that amount. And of all final goods, we only want to count goods that are in their final state of usage. We're not going to count intermediate goods or goods that are used in producing other goods. So keep in mind that we're only counting goods that are intended to be in their final use. And then we're counting goods and services. Goods are something we can feel or touch. A service is used up at the moment it's produced. And then produced, we have to have something that is produced because we're counting our gross domestic product. And by produced, I mean it's not something where let's say you buy some land. The buying of the land isn't produced, it was already there. Or if you buy stocks in a company, the price of the stocks is not something that's produced. So we don't include that in our gross domestic product. And it has to be produced for the marketplace. In other words, we only count goods with the intention of being sold. If you mow your own lawn, we don't count the value of that service in gross domestic product. But if you hire a landscaper to mow your lawn, then that would be counted in the gross domestic product. So it has to be something that's produced for the marketplace. And then during a given year, we say that GDP is flow variable, meaning that it's measured over a period of time. It isn't a stock variable that is measured at a given moment in time, but it's over a period of time. And then within the nation's borders. We only count goods that are produced within the nation's borders. You should have a real good understanding of this definition to be able to appreciate and calculate gross domestic product. In talking about calculating gross domestic product, there's a number of methods that are used to produce or to calculate gross domestic product, but the most common one is what's called the expenditures approach. And the expenditures approach uses a formula where the spending is divided into four categories, or the output, is divided into four categories. We have what's called consumption spending. This is spending by the households, by the individuals within a unit. We have what's called private investment. We have government. Spending, and then we have net exports. In calculating and using the expenditures approach, we then take consumption plus private investment plus government spending, and then plus or minus net exports, and that figure there equals our GDP. So a lot of times we'll see this established or in the formula, and in your textbooks you'll see gross domestic product when it's calculated, equals consumption spending plus private investment spending plus government spending, and then plus or minus net exports will equal gross domestic product and what our gross domestic product is. Now you might ask, why should you be concerned about gross domestic product? Keep in mind that this is the figure that we use to measure our production within a given year. We use it for a number of reasons, but the most common reason is to see if we have increased our production from year to year. Maybe one year our gross domestic product might be 700 billion, just using that as a figure. The next year it might be 750 billion. From that we have to adjust for inflation, but from that we might say, yes, we did increase our production and the value of our economy improved. When you are working and reading through this section, make sure you understand what should be counted in each section. Remember, this is consumption of private individuals, households. This is investment spending, such as buying a new house. This is government spending. And remember, when we say government spending, don't be confused and think it just means the federal government. This is all levels of governments, federal, state, local, township, and any type of government spending. So don't let that confuse you. And then also remember, we're only measuring new products or new output. Anything that's used, we don't count the value of that. For example, if you buy a used house, and houses, from your reading, you should be aware, are in investment spending. We count that as an investment. If it's a used house, we don't count it because it was already counted once. But the real estate salesperson's commission would be a new service, so we count the real estate salesperson or commission. Likewise, if you bought a used car, we don't count the value of the used car because it was counted when it was new. But if you bought it at a dealership, the commission that that salesperson made would be counted towards gross domestic product. And then also keep in mind, in government purchases, we don't count transfer payments. And your book gives a good definition of transfer payments, payments that are made or redistributed to members of society with no production expected. So keep those factors in mind when we are working with gross domestic product. There are a couple of problems associated with the calculation of gross domestic product that you should be aware of. Gross domestic product, for this reason, some people think that gross domestic product may not be as accurate a figure as we should have, but nevertheless it is the figure we use. Gross domestic product doesn't take into consideration quality changes. Sometimes there's such a tremendous improvement in quality, but actually the cost of that output is down, and so we don't consider that. Gross domestic product doesn't consider the underground economy because it's not reported. This would be the sale of drugs, prostitution, gambling. You can just imagine all of the office gambling that goes on, and money is changed hand, and there's a service performed, but it's not there. And also, GDP doesn't count non-market production. Work that wasn't intended for the marketplace, cleaning your own home instead of hiring a maid, mowing your own lawn, as I mentioned. So make sure you have a good understanding of gross domestic product. Another section of this chapter deals with unemployment, and it highlights 4 types of unemployment, or our book highlights 4 types of unemployment. Frictional unemployment, those people that are just between jobs or returning or starting a new job. Seasonal unemployment, those people that have an off-season during their work. And there's structural unemployment, which is joblessness caused by a mismatches between workers and the skills that the employer requires. And then there's cyclical unemployment, the unemployment arising from changes in production over a business cycle. Make sure you have a good understanding of those 4 types of unemployment. And then also make sure you have a good understanding of the costs of the unemployment that are the cost to our society. Also, in the concepts of this chapter, keep in mind the idea of measuring unemployment, how we determine who is unemployed, and keep in mind that there are a lot of discouraged workers that have given up looking for a job, and so when we say the unemployment rate is 5%, we're not counting those that haven't been actively seeking a job because they haven't reported themselves as unemployed. We don't count people that have a part-time job, even though they might want a full-time job. Even if they work 1 hour a week, as far as the employment statistics are concerned, they have a job, they work that week, so they're not unemployed. So have a good understanding of what it means and what the definition is of unemployment.